Welcome to this Spokane housing market update. It's June 2023. This video is important because opinions on the housing market range from there's a housing crash imminent to it's business as usual, nothing to see here. So if you're a seller, it's important to understand what market you're entering. Likewise, if you're a buyer, it's important to understand where the opportunities are and how to tap into them. So let's take a dive into the data and see what's been happening nationally as well as locally here in Spokane. My name is Phil Wells. I'm a Spokane real estate agent that takes the time to keep up to date with the market, and I want you to be as informed as possible too. So let's get into it. Looking first at national pending home sales for existing homes. Contract signings were completely flat in April on a month-on-month basis, which is not what you'd expect heading into the spring and summer selling season. Year over year, contract signings declined 20.3%, which represents 23 consecutive months of year over year sales declines. Here's what the National Association of Realtors chief economist had to say about April's pending home sales. Not all buying interests are being completed due to limited inventory. Affordability challenges certainly remain and continue to hold back contract signings, but a sizable increase in housing inventory will be critical to get more Americans moving. This economist dives straight into the supply side of the equation. We have limited inventory and we need more inventory to get the economy moving again. So sales are down because of dramatically reduced inventory. You can't buy what isn't there, that's plain to see. But this economist also mentions affordability in his statement there. Let's look into that a little bit more. Here is a post I shared on Instagram this month. This looks at monthly payments at different interest rates. This is a great example because from my experience, a lot of people aren't too concerned about their mortgage. A lot of people are seeking affordable monthly payments. A $600,000 home when rates were 3% would cost you just over $2,000 a month to own. That same house at 7% rates would cost you $3,100 to own. That's a 50% increase in monthly payments, and you're not getting more house for that. So initially it's plain to see we have low inventory, yes, but we also have a major buyer affordability issue that is stifling demand. Let's move on now and look at mortgage rates. Obviously, the majority of people are buying with the aid of a mortgage, so to keep an eye on mortgage rates does give us some insight into buyer demand. Sticking with April for a second so we can really round out that period of time. Mortgage rates at the start of April were at 6.44%, and by the end of April they were at 6.59%. So those are the mortgage rates people were working with in April that caused contract signings to hold steady from March. The most recent rates I could see have climbed once again through the 7% range, but have since receded slightly and are now at 6.89%. A lot of people blame this most recent peak in mortgage rates on the children that run the federal government and the risk surrounding the debt ceiling negotiations. Given this, we would expect to see a dip in May's pending home sales, and you'll just have to come back next month to see what happens there. According to the National Association of Realtors chief economist, the person that we covered just before, he expects mortgage rates to descend lower later in the year as the consumer price inflation calms down. It will be interesting to see what residual buyer demand is there when rates do finally drop. Let's go further down the demand side rabbit hole and look at mortgage application rates. This is exactly what it sounds like. We want to know how many people are actually applying for mortgages because this is a huge leading indicator for overall demand. Throughout the month of April, we saw 5% swings either side, adding up to a pretty flat April. Bringing us up to date, as mortgage rates peaked through the 7% mark, we saw mortgage application rates decline for the past 3 weeks. So as mortgage rates approached and broke through that psychological 7% barrier, we have seen mortgage application rates decline. But in April, as we saw mortgage rates still high but fluctuate in that 6% range, we didn't really see much by way of ups or downs in terms of mortgage application rates. So overall, I think it's fair to say that these high rates have stifled demand. So let's round out that national picture and summarize what's been happening nationally. We have low inventory, but we also have stifled buyer demand. As the economist from the National Association of Realtors mentioned, we're going to need that inventory in order to get this housing market going again. Mortgage rates are also far too high, which is stifling buyer demand. People that are looking at homes are finding themselves looking at far less desirable homes than they first envisaged, or they're completely priced out of the market right now. This is further evidenced by the fact that mortgage application rates are hovering around 30-year lows. So if you're a buyer, the national picture would suggest that even if you can afford to buy a home, there is such low inventory that you're likely to encounter some competition because there are so few homes available. If you're a seller, the national picture might suggest that if you list your home for sale, it would be a hot commodity and you can get what you want for it. Well, that's true to some extent. However, looking at what we looked at before with the affordability example of a $600,000 home, people are maxed out in terms of their budget, so don't assume that a buyer is going to be head over heels in love with your home and will do anything to secure that contract. So let's look at the Spokane market and see how it compares to what's been happening nationally. Sales here in Spokane are down 20.6%, which is right in line with the national and western regions' decreases. Median home prices are down 8.4% on a year-over-year basis to $412,000. It's worth noting, though, that that isn't the whole picture, because home prices have been rising on a month-over-month basis. Prices in February were $375,000, so we're up $37,000 or 9% in 3 months. It's worth noting that that price growth does appear to have stalled in May and is actually down $3,000 since April. Although $3,000 I would consider a blip until we see any trend emerge. Inventory is up to a 1.4 month supply. That's still very low. New listings are down 16.8% on a year-over-year basis, which isn't great. I would expect to see new listings start to pick up as we head into the busy spring and summer selling season. You can see days on market of 1 week. That's a good indicator that despite mortgage rates, there are still buyers out there. Overall, I think this suggests then that the Spokane market is moving in line with the national market, and you can expect news and macroeconomic data to impact Spokane just the same way as it would impact anywhere else in the nation. Now I wanted to move on from the data and look at a couple of news articles that have stood out to me this month. We're just going to touch on the headlines because there's a lot going on. If you want to read the articles in their entirety, there will be links to them in the description to this video. We had a lot of drama this month with the political theatre surrounding the debt ceiling, which unsettled the markets and pushed mortgage rates higher on the back of that uncertainty. In terms of more tangible macroeconomic news, the Fed kept its funds rate at 5.25% from last month, and the rate of inflation continues to drop. So overall, good news there. The Fed doesn't see a reason to up its Fed funds rate, which makes the possibility of lower Fed funds rate and subsequently lower mortgage rates more probable in the near future. This article really stood out to me this month. The number of people who think it's a good idea to buy a home hits a 45-year low. This article doesn't really get granular into the reasons people feel this way, it's just based on people's perception of the market. As any good investor will tell you, any market, whether it's the stock market or the housing market, is based on perception. What makes a home worth more than the building materials? What makes a company worth more than its annual profits? Is the perception of that asset? Is it a good store of value? Does it have the potential to gain in the future? I'm of the opinion that it doesn't matter when you buy a home, it's how long ago you bought that home. There are very few people that are 10 years into home ownership that regret buying a home, but there are a lot of people out there that regret not buying a home 10 years ago. Building on this point, I wanted to bring in a non-tangible aspect of home ownership. Studies have shown that the emotional and psychological benefits that homeownership has on a person's health and self-esteem. I can vouch for this. I've been a renter before and felt that sense of being somewhere just temporarily, somewhere where you can't really get settled. I think there's a lot to be said for what Gary has to say here. Lastly, I wanted to introduce this survey for those naysayers out there who are predicting a housing market crash and saying that it's not a good time to buy. For the past 11 years, real estate has been considered by far and away the best long-term investment class out there. So if you're a real estate investor or you're just a homeowner that's hoping that it will pay off in the long run, over time, owning real estate boosts your net worth. That's irrefutable. Now it's time to piece all this information together and see if we can make sense of the market as it exists in June 2023. The big news is that we haven't heard much from the Federal Reserve this month in terms of them upping interest rates. So have interest rates peaked? Can they start to come down soon? The National Association of Realtors chief economist predicts that mortgage rates will be lower in late 2023. For that to happen, the Fed funds rate must have to come down first, so I'm optimistic on this front. The most recent report for pending home sales nationally shows completely flat sales from the prior month, which is better than a decline, but you would expect to see more sales as we head into the spring and summer selling season, not less or not flat from the month prior. Mortgage rates crept above 7% again off the back of the uncertainty relating to the national debt ceiling crisis. In terms of Spokane specifically, sales are down and we continue to have low inventory. Prices here in Spokane are down on a year-over-year basis and are down $3,000 on a month-on-month basis, which breaks with the trend we've been seeing of month-over-month price increases here in Spokane. It should be noted that prices here in Spokane are up $37,000 or 9% from February, so I don't recognize this most recent $3,000 drop in median home prices as anything more than a blip. Of course, if a trend does materialize, I will report on it. Days on market here in the Spokane area are sitting at 7 days on market, suggesting there is some strong demand out there, even at 7% mortgage rates. If you're a buyer, know that inventory is low here in Spokane, so it might actually take you a while to find the right home. Also know that given how low inventory is, you'll likely find yourself competing with other well-qualified buyers. Don't be afraid to compete though. In my experience, we're talking about thousands of dollars in terms of differences between offers or just slightly more favorable contract terms. We're not talking about $50,000 non-refundable earnest money here. Know that buying a home is possible, but it can be competitive, particularly for those most desirable homes. It is also possible to get concessions up front when you enter into a contract or to renegotiate inspection items right now. For example, I just negotiated a brand new roof on a property that I've got under contract. If you're a seller, know that proper preparation is key. While it's true that your home may attract a lot of attention right now because there's not much else on the market, it's also true that buyers are struggling with affordability right now. Price your home well and fix those obvious issues up front. Expect issues discovered during inspections to come back to you as increasingly maxed out buyers are refusing to just accept issues and close regardless. As mortgage rates decline, hopefully towards the end of this year, I do expect that sentiment to wane, but right now, that's what we're working with. That's it for this video. I hope you gained from this video. If you did, please like and subscribe. That really does help me out. Also go and follow me on Instagram, that's where I'm most active. If you're looking at buying or selling in the Spokane or Coeur d'Alene area, reach out to me, give me a call, shoot me a text, send me an email, or send me a direct message, and I'll be honored to work with you. Until the next one, my name is Phil Wells, and thank you for watching.